Hey guys, this is Sumner Healey from landinvestor.co. We've got a really special video for you guys today. As you guys know, our Land Investing Accelerator program is launching August 31st. And so what we're doing as a little gift to you guys is we're releasing one of the modules here for free on YouTube. That way you can get a better sense of how the course is structured and ultimately see if it's a good fit for you. The reason I built this course is not because I felt like the world needed more land investing information. What I felt the world needed was a course that was built around teaching folks how to actually build a sustainable, long-term land investing business. You see, the actual tactics of land investing are relatively simple, and there's a ton of great information out there. I am not the first one to reinvent the wheel when it comes to land investing, but what is missing in this world is teaching folks how to actually build a true land investing business that runs day in and day out without their involvement. So without keeping you here any longer, we're gonna jump in and give you guys a breakdown of one of the modules from the course. If you guys wanna learn more about the course, you head over to landinvestor.co or click the links down below. I'll see you guys inside the course. Hey guys, this is Sumner Healey here, and before we dive into the course, I just wanna give you a quick moment of kudos and applaud for taking the next step and diving into the crazy, wonderful, fantastic world of land investing. Land investing has entirely changed my life, and I'm really excited to share it with you. So without further ado, in this first module, we are going to go and break down how exactly we get paid as land investors, right? Before we get into the tactical, before we get into the trenches, then we first need to understand from a bird's eye view, how does this business even operate? So let me cover the core components of how we actually add value and get paid as land investors. And the very first thing that we do is we go direct to owner. That means we build out marketing and we go directly to people that own land currently, and we make them an offer, right? We don't go on Zillow, we don't go on the MLS, we don't go looking for properties that are already listed, because people that are buying on the retail market, well, it's very, very rare that they ever get a deal. Now we can kind of take our own destiny into our hands and say, hey, you know what? This is how much I want to pay for a property. I'm going to go reach out to owners and make an offer to them. Then we can start negotiating from there. The next thing might be the most important point, and that's that the land market is an incredibly inefficient market, right? If we look at houses, we can say, hey, my house is worth this much, and I know this because my neighbor's house just sold for $400,000, the house 2 lots down just sold for $400,000, and then one house 4 lots down sold for $450,000. Now we can blend all that information together, and as long as the square footage and floor plans are similar, we can get a pretty good grasp on what that house is worth. Land is very different. First off, there's just a lack of actual data out there, right? There's not a ton of comps on land. There's a lot of private sales that happen that never get recorded. There's a lot of kind of back alley agreements. Someone signs over the deed. And so there's just a lack of data out there. There's also just overall less sales in the land market than there is really in any other real estate asset class. But the other thing with land is that land is incredibly subjective, right? And what I mean by that is one property can be 40 acres and the adjacent lot can also be 40 acres, but one has a river on it and has, 15 pinyon pine trees and a small hill in the back, and the other one's just flat grassland. Well, those are going to be very, very different subjective values associated with those properties, right? I might view that river as a concern, right? Maybe there's a portion of a flood zone on the property. I'm concerned by that. And the buyer might think that's lovely. That's actually exactly what they're looking for. And so you don't really see that much subjectivity with other real estate asset classes. It does exist, but typically not to the same degree. Now, the other thing that we need to think about is profile of landowners, right? A lot of times if you're going and marketing for single family houses, there's a good chance that the owner actually lives in the house, right? Their relationship to that property is going to be much different than the typical landowner. In most cases, the landowner might live in the same state or out of state, but rarely do they live next to the property or on the property. And more times than not, they might use that property once a decade, if that. In a lot of cases, we talk to people that they've never even seen the property, right? They bought it on a whim. It was sold to them in a magazine, or they went to a trade show and someone kind of gave them a hardcore sales approach and closed them on the property, or maybe they just inherited the property, right? What we've noticed is that a lot of people have this wonderful dream of, I'm buying a property, I'm going to develop it, and more times than not, most people don't really realize how difficult it is to develop raw land. And so you get these people that have this ownership profile where they don't really feel that engaged with it, right? They used it once or they never used it. They live in a different state or a different county, or even if they live in the same county, they might live miles away from the property. And so the intrinsic value that they feel towards that property is much lower than someone that lives in the house, right? And so what that means is more times than not, they're willing to negotiate. They're open to creative offers because they don't really feel that attached to the property. This next point is that for most of the properties that we're buying, and we're going to make some generalizations here, and of course there's always exceptions to the rule, but most of the properties that we buy are going to be anywhere on the low end, $5,000 for a sales price, all the way up to maybe $150,000 to $200,000 as a sales price. For that type of land, it's very, very rare that banks want to lend on it. More times than not, they look at that as like a liability on their balance sheet, not an asset. Right, and you can have a house that's $200,000, and a bank is definitely willing to have that on their balance sheet. A $200,000 piece of land, unless there's a really clear development play, or it's something where down the line there is a clear objective of how it's going to be transformed into something valuable. More times than not, they don't want to lend on it. And so what we've noticed is that's a huge opportunity for us. The reality is most buyers out there don't have $50,000, $100,000, $200,000 liquid, ready to go deploy and buy land. But for us, we can play the role of the bank. We can offer creative financing on all of our properties, and more times than not, we do. What we've noticed is that a lot of other people out there that are selling land, they don't offer this, right? And so if all things are equal, if we're selling at the same exact price as another retail listing, but we're offering down payment and a monthly payment, well, most people are going to opt for that. Even if they have the liquidity, more times than not, it's actually better to finance, right? And unless you follow the Dave Ramsey school of thought, most people would agree with that. And so what we've noticed is that by being able to offer owner financing, not only can we command a higher price, we can also sell through the market faster. One of the biggest issues with land is that it's inherently a pretty illiquid asset. So we need to get creative in terms of how can we figure out how to sell this asset faster, and offering owner financing is one of the best ways. Now, one of the things that you'll notice as you get deeper into the space is that most folks don't know how to market land. Whether they're realtors, owners, or other investors, most people just don't put the time into actually marketing correctly. What that means for us is there's a huge value to be unlocked by marketing our properties in a manner that inspires, in a manner that tells a story, in a manner that provides all the relevant information that a landowner or potential landowner would ever need in order to make a decision. Go scroll around Zillow or Redfin or any of these listing sites, and what you'll see is a cell phone picture taken by a realtor on their iPhone. Typically it's blurry. More times than not, it's going to be a few sentences, a quick blurb about the property, and none of the relevant information that you need in terms of property taxes, coordinates, HOA dues, or anything along those lines. Very rarely are you going to find a realtor actually putting that information out there. So the school of thought that we follow here is, first off, visuals are everything, right? We need to market correctly by having phenomenal photos. We need to build out world-class drone videos and make quick YouTube videos kind of explaining the property. The next thing is we need to use our content and ad copy as something that, one, inspires and tells a story. We want to paint the picture, right? This is the kind of property where you could come and pull your mobile home out there and sleep under the stars, paint the picture of what the ideal use case would be for that property. And the next thing is we need to add all of the pragmatic information, right? If someone's going through our listing, every question should be answered. Hey, this is how far utilities are from the property. This is the property taxes, so on and so forth. And just by going that extra mile, I have a hunch that you could buy retail properties, relist them at a higher markup, include better marketing, and probably have a spread there. Now, of course, when we marry all these concepts together, there's huge value to be unlocked, right? We wouldn't really just build a business case just off of one of these items, but I can't stress how important marketing truly is. And the last point is what we'd call minor developments, right? We're not really in the business of true real estate development. Very rarely are we laying sticks and bricks or doing anything along those lines, but that doesn't mean that there's not big value to be unlocked by making minor improvements to the property. The best things that we've seen are road development. So if a property has what we call platted or legal access, but there's not a true road to it, sometimes blading in a road can be a huge way to unlock value. The next thing can be just as simple as clearing brush, right? If the property is covered in sagebrush, for example, you could clear out a little bit of an area for someone to come park their RV or put a home pad. So making these small improvements to where people can actually see the vision, right? If they go up to the property and they see no road and just sagebrush for 40 acres, not that inspiring. But if they see a road's been cut in, there's a little home pad where they could actually build, well, now they're starting to see the picture. And what we've noticed is most consumers, you really have to hold their hand to help present to them, hey, this is how you would use this property. And so something like that is a great way to add value, and typically it's not going to be a huge capital expense for you. But one of the best ways to add value in the land business, and we'll touch on this in much greater length in the course, is minor land splits or subdivisions. Now, the regulations are going to range county to county, and even whether you're in a city or not in a city. So there's a lot of nuance to it, but the simple idea is anytime you have a large quantity of something, now you can break it down into smaller increments. There's more value to be unlocked there. Let me give you an example. If you went to Costco and bought 30 water bottles, right? Maybe it costs you an average of 25 cents a water bottle when you buy them in bulk. Now you go to your son's baseball game and you're selling out water bottles. I bet you could sell each water bottle for $1, maybe $2, $3, just depending on where you're at and how badly people need the water. The same case is true with land. In the correct markets, you can take large increments of acreage, break it down into smaller units, and get a much higher price per acre. And so there's a great way to add value through minor land splits or subdivisions. Now, when we marry all these concepts together, we get a business where there's a ton of value to be unlocked, right? It's not just that one of these concepts is necessarily more important than the other. It's when we blend them all together, we have all of these working in unison, there is a massive opportunity to build a very, very profitable business.